Hi, Kelly Eckholt here to update you with the key events of the week. So this week we got some filled jobs data which showed that labour market still remains pretty anemic. We certainly did see some stronger jobs data coming out of the regions, but in the major metropolitan areas such as Wellington and Auckland, job losses are still occurring. Business confidence for September came out, and that did increase a little bit relative to back in August, but we did notice at the end of the month for those respondents their responses were quite a bit weaker after that weak GDP data, so that suggests that business sentiment remains pretty brittle for now. Globally, we're actually back into another US government shutdown, so that's going to herald another period of global economic uncertainty, and we're certainly not going to see any economic data out of the US government for the foreseeable future. A highlight in the week ahead is going to be the release of the Reserve Bank's October Monetary Policy Review, and we're expecting a 50 basis point cut to 2.5%. That's justified by the fact that there's quite a lot more excess capacity in the economy than was previously anticipated, as reflected in that kind of weak GDP data that we saw a few weeks ago. And we think on the MPC, the dovish MPC members who wanted the bigger 50 basis point cut back in August are only going to be hankering for a larger cut this time instead. The last thing I'll mention is that the New Zealand dollar has been relatively weak this week, and it's fallen in particular against the Australian dollar through 88 cents, and that's the lowest level it's been in quite some time. That's reflecting New Zealand's relatively weak growth and interest rate differentials, and it was interesting to note this week when the Reserve Bank of Australia spoke, they seemed to be a lot more equivocal about when and whether they would cut rates further. I'll be back to update you again next week.